Hello traders, in today's video I'm going to show you how to make trades like this one over here and this one over here and this one and this one over here using only the 200 EMA. So if this video sounds great for you, stay tuned throughout the video because I'm going to teach you everything from the beginners level and to the advanced level so that you can start trading using this strategy. So let's begin with the video. So firstly, before we begin with the video, I want to show you how to put this indicator on a chart on TradingView. So here on TradingView, on the menu bar, you'll click on indicators. Then on the search bar, search for EMA. You'll see it moving average exponential. Then you will see your chart looking like this. Then hover on the indicator, click on settings. On the inputs, change the length to 200. You can also change the color maybe to white and then click OK. You will see it something like this. So when price is below our moving average, we will sell. So when price is above our 200 moving average, we will buy. So right now that we have everything to get started trading this indicator, now we need to know how to make an entry using our price action entry strategy. So I will show you with this next section of the video. Before we begin with the video, let me show you how to draw supply and demand zones. From the first one, we can see that we draw the zone from the open of the previous candle and then to the low of this candle here. And to draw the zone, you have to identify an engulfing candle, even if it's a bullish engulfing candle or a bearish engulfing candle. Here we can see that we have a bullish engulfing candle, so we draw the zone from the open of the previous candle. And then on the second one, we draw the zone from the high and then to the low of the week. So you can do the first one, even the second one is the same thing, but this one will give you a low risk to reward ratio. And for entry, we can see that on the first one we have an engulfing candle entry strategy. And one thing that you should note is that you have to see a bearish candle first after this bullish engulfing candle. Here we can see we are entering using a demand zone. On demand zone we buy, and then on supply zone we sell. So from here we can see that we let the market to go down and then touch the zone, then close with a bullish engulfing candle. Then we will enter on the retest of the previous candle's open, and then on the second one we enter if the market doesn't close with a bullish engulfing candle like this. If it closes like this, then we will enter when the market come down and retest here and then move higher. Our stop loss will be below the zone. And then on the last one here is the same thing as this first one and the second one, but here we just enter because we don't want to miss a trade because of the retest. Remember, demand zone we buy, supply zone we sell. Let me show you the supply zone entry. On the supply zone entry is the same thing as the demand zone entry, but vice versa. So we can see from here on the engulfing entry retest, we wait for the market to make a zone first, then we have to see a bullish candle and then another bullish candle here, and then if the market touches the zone, close with a bearish engulfing candle, we will sell on the retest. Same thing as this one, if it doesn't close with the bearish engulfing candle, we will sell when the market retests this candle here. The market will come and retest the body of this bearish candle. And then lastly, we can see from here we sell when the market closes. It's the same thing as this one and the same thing as this one, but here we just sell because we don't want to miss an entry of the retest. Here we don't want to miss an entry because we want to trade the retest. So let's move on. Now that we have everything to get started, let me show you a few examples. You can also go and backtest this yourself, because everything that you see before you start putting in your money into the market, or if you start investing your money into the strategy, go do your research and also backtest this. If this is suitable for you, then you can start trading using it. So as you can see from here, we can see that price is below our 200 moving average. From here we can try to find our zones. So we will look up for a zone here. As you can see, we have the first zone here. This one is entry candle. As you can see, we sell on the close of this candle. We sell on the close of this candle. Always make sure that when price breaks the low that you have entered in, then put your trade to break even, because you might be targeting this low here. So let's find another entry. Another zone is this one here. As you can see, we have everything to confirm our trade, but the entry is very risky. As you can see, this is 1:2, but we don't want to take this kind of trades here. And then we have another zone over here, which is our supply zone. As you can see, the market came to the zone and closed bearish. Then we enter here stop loss above, target. This is 1:8. As you can see, we also confirm that our 200 moving average is above our price action. We can also see from this one here, we can see that price is above, our moving average is above our price areas. Here we just draw the zone because we can see our bearish engulfing candle here, and then we enter, then target somewhere around 3:4, 3 or 4 risk to reward. You will see how this strategy will be amazing if you hold your trades for a very long period of time. So from here we can see that we have our zone here, we have a zone here, and also we can see that our moving average is above our price action. Then as you can see from here, we can enter on the retest of this candle here, stop loss being above the zone, or also you can put it above this previous candle here for safer stop loss. And also as you can see, the market moved lower very aggressively. So from here, if you miss this one, there's a lot of examples here. We can see another one here, and then you wait for the market to come to the zone, touch the zone, and then close here, stop loss above, and then this is 1:10. And then as you can see, this strategy is very amazing. So go and backtest it yourself before putting your money into it. So let's move on to more examples throughout the video. This one here will be our last example for the supply zone before we move on to the demand zone. As you can see, we have our supply zone here. Price came to the zone, and then wait for the bearish candle to close, then we will enter here, stop loss being above, then you can target 1:4 or something like that. But obviously when the market breaks the low of the entry, which is this one here, you will put your trade to break even. Even if it stops you out here, you can retry again from here, and then when it breaks this low here, you'll also put your trade to break even. So you'll see it won't be easy for you to lose a trade in this strategy. So even if you missed this one, you can also find another one here, but this one will be kind of risky, but let's try it out. Stop loss here, this is 1:2 here, and obviously when price moves below here, below this low after the entry, we put our trade to break even so that we can have a risk-free entry. So let's move on to the demand zone so that we can see how we buy using this strategy. As we can see from this example here, we can see that price is above our 200 moving average. We draw the zone. As you can see, we draw the zone from here, then we wait for the market to close bullish after touching the zone. So from here we just wait for the market to come and close something like this, and then we target our profits. And then from here, as you can see, we close with a bullish engulfing candle. We can still minimize the risk by doing the same thing here if we want. So if you don't mind, then let me show you. As you can see, we have the zone here. We wait for a bearish candle, and then our confirmation candle is this one. Then because price didn't close with a bullish engulfing candle, we will enter here on the retest, and then we buy here, stop loss here. Let's see how we did. As you can see, price was in our favor, and so after price has broken this high here, you just put your trade to break even. So you see, you enter here after price has broken this high here, you just put your trade to break even and let the market to run. So another one is this one here. Price just moved higher, so meaning your entry will be here. You can also enter when the candle closes, then make your buy limit order on the retest for in case if the market retests the previous candle's body. So that one will be very simple for you guys to do. So here on this example, you can also see that price is above the 200 moving average. We have our zone here. Let the market to touch the zone, and then you trade to the bullish side. Simple as that. We're long here, stop loss below, target 1:5 here. Even simple. So as you can see from this example here, price is above our 200 moving average. We draw the zone here, but price spiked below our zone here, so that means this one will be invalidated. Okay guys, please remember that. So before I show you one last example on this video, please consider subscribing, leave a comment below, and also share the video to your friends who need this strategy the most. So before I do this one last example, so let's do this one last example over here. As I told you before, that we draw the zone from the high to the low, from high to the low, and we can also use the wick. As you can see from here, we just wait for the market to close bearish after touching the zone. We enter here, stop loss above, and then we sell because price is below our 200 moving average. And also, if you missed that one, you can also enter here. There's a lot here. And where is another one is here. Even though price moved below, but maybe you could have put your trade to break even after it has broken this low.